Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets, from crypto to equities to bonds. For our latest views, visit macrohive.com.
My warmest welcomes to you, Doug. It's great to have you on the podcast today. Now, before we get into the sort of main part of our conversation, I'd like to understand a little bit more about your origin story. So it'd be useful if you could just tell us a little bit more about your background, what you studied at university. Was it inevitable that you'd end up in finance? And perhaps just some of the highlights of your career so far.
Well, thank you very much for having me. I don't think there was any inevitability about my ending up in finance. I went to Princeton University as an undergraduate, and I studied economics. I kind of drifted into economics from the liberal arts. But as I got into economics, I went to a more and more quantitative side of the subject. By the time I was writing my senior thesis, I was actually doing some reasonably cutting edge things. This was back in the 1980s, a different era altogether. And I did work on the generalized method of moments and real business cycle theory. These were the cutting edge topics, actually, in macro. We were trying to reinvent macroeconomics, you see, based on micro foundations. The idea of an optimizing representative agent and so forth. And it was, from a mathematical standpoint and statistical standpoint, some pretty sophisticated stuff. But I don't think it was all that successful, because actually it is the heterogeneity of agents in an economy. It's not a second order effect, it's a first order effect. And so a lot of the math that we ended up doing was based on rather unrealistic assumptions of uniformity of preferences and so forth. So that's how I got into economics. And then following that, I kind of decided, well, maybe I should just do mathematics because I enjoyed it so much. And I went and got my master's and PhD from the University of California, Berkeley. And what a wonderful math department we had in those days. This is now the late 1980s, early 90s. There were so many fantastic mathematicians, multiple Fields medalists in my department. And it was just wonderful doing the work I did. It was in differential topology, branch of pure mathematics, and had a very great time. What I did, however, is I worked part-time at Barra in Berkeley, California. And it allowed me to live the high life for a graduate student. You know, I wasn't living in the graduate student housing down by the train tracks in Albany with these trains rumbling by and shaking the house and stuff. Instead, I was able to live in San Francisco with a lovely view because of this work I was doing. I was earning a decent living. And so when I came out of graduate school and got my degree, I had a choice to make. Would I stay in academia, or would I go into finance? And I sort of decided to go into finance. You know, I got an amazing job offer. Fischer Black hired me to be his assistant at Goldman Sachs. He actually did it on the strength of that senior thesis I wrote that I mentioned earlier. And actually, a lot of that stuff was featured in Fischer's last book called Exploring General Equilibrium. And he sort of discovered my work, which had been done when I was an undergraduate. And so that's why he hired me. And so I was at Goldman Sachs and then went on to the proprietary trading desk, the bond arbitrage desk. And I was there up through the late 90s. And then I went on to Greenwich Capital, where I headed the mortgage arbitrage desk. And then I eventually headed mortgage trading, a wonderful firm. And subsequently, I was at Fortress Investments. And then I went to a quant firm in London, AHL. And that was a very, very interesting experience. As you know, in finance, the world is you have all these different segments and specialties. And it was my chance to really have a careful look at the so-called CTA business. And it was a terrific experience and a very good firm. And then after that, I founded Florin Court Capital.
No, that's really interesting. Thank you so much for sort of giving us the background on that. So Florin Court Capital, its focus is systematic trading and particularly trend following, and there's a lot of focus in particular on the niche and alternative markets. Could you tell us a little bit more about what exactly trend following entails, what drives its performance in particularly uncertain environments, and how you apply those sort of systematic strategies to what are no doubt a little bit more illiquid markets?
Okay, so trend following is a very interesting thing, and it really helped me to come into it with the finance background that I had. So I was asking myself very interesting, kind of very incisive, if you will, questions about why it works, what drives it. And trend followers trade the interplay of directional movement and volatility. It's not just the trend, it's also volatility. And the basic idea, and I think I'm one of the first people to articulate this because I saw it, and I haven't really heard it much elsewhere. The basic idea was found in the work of Minsky. So Hyman Minsky was an economist, and he studied bubbles and crashes. You find a nice exposition in Kindleberger's book, Manias, Panics, and Crashes, okay? And essentially the idea, and he thinks of this more on a big macro scale, is you have these huge trends, these bubbles. And eventually there's a period of distress where there's enhanced volatility, and then the bubble becomes discredited, a new idea emerges. But I think this has more general applicability. Themes take over in a market, trends emerge, then there's a burst of volatility around the time narratives are changing. So narrative changes are often, not always, but often accompanied by a burst of volatility. What CTAs do is they ride trends, and then they do this thing called volatility scaling. And when you volatility scale, you're adjusting the size of your positions to react rather quickly to market volatility. So imagine you have a nice trend up or down, let's say up, and you're long some asset. And at some point, the volatility starts to jump. It goes through what Minsky or Kindleberger would start to call distress. That's consistent with a narrative change. Well, now you're cutting the risk. Okay, vol doubles, you cut the risk in half. The basic rule is the basic rule is that the position size, I should say, the position size is cut in half in order to maintain the risk at a relatively constant level. So if volatility jumps, the position is cut in half. And that allows you effectively to take a profit. And if the trend reverses, you lose a little bit at the beginning, assuming the position size has been cut, and then you pick up the new trend on the way down. And the importance of that volatility scaling is quite high. In fact, if you take it out and make volatility your scaling very non-reactive, you're going to lose a large part of your Sharpe ratio. Volatility scaling is key to what CTAs and trend followers do. So the idea is you're riding trends up and down and getting smaller in position size when there are bursts of volatility. And that tends to help you because, as I said, trend reversals are usually accompanied by a burst of volatility.
That's really interesting. Thank you so much for that. And so I suppose the first question is, I suppose the market, I presume, is not particularly good in general at sort of calling those when the trend starts to turn, when it's sort of the sort of second order of you're seeing that in the volatility. Is that what sort of really kind of separates the trend following strategy from just sort of herd mentality, riding the bubble, kind of getting caught in the worst part of it?
Well, you make a good point. If you applied this strategy to one market, you're likely to be disappointed. The signal just isn't that strong. You have an edge, but it's not a big one. And that's why diversification becomes so important. If you look at the basic trend models that we use and other people use and apply it to 1, 2, 5, 10 markets selected at random, you'd sort of say, why would anyone ever do this? The Sharpe ratio isn't acceptable. But as you add more markets, creating more independent bets, you end up in a situation where that slight edge gets bigger and bigger and bigger. And part of the reason we have been more successful than a standard CTA is we're trading about 500 alternative markets that are not that correlated with each other. Colombian interest rates, French electricity, methanol in China, yellow maize in South Africa, Malaysian palm oil, crossover credit default swaps in Europe. Okay, how related are these markets? Not very much. And if you build up a portfolio with 500 things like this, that small edge starts to become a big edge, right? You become more like, forgive me, the casino, as opposed to just one table at the casino. And because we have all these markets, because the pairwise correlations are low, we end up having a level of diversification that is, in our view, several times higher than an ordinary CTA. And our results sort of bear that out. It's, you sort of see about what you would expect on the basis of that.
Well, thank you for that. That's really interesting. I suppose it's a lot of operational work and in getting into those little markets and understanding them and not being sort of in places that you don't sort of fully understand, I'd imagine.
Yeah, that absolutely is the case. It's quite labor intensive. And I have a very experienced team doing this who've been doing it for years. And it's not the prettiest thing. There's part of me that would just like to do some badass mathematics and stuff like this. But the truth of the matter is the models we have, they're hard to improve a lot. Markets are non-stationary. The past doesn't repeat perfectly. It's, you know what I'm saying. But finding a new market where it's pretty uncorrelated with things, where there's not a huge amount of systematic participation, right? Not a huge amount of that's generally more additive than tweaking your models a little bit in a way that back tests slightly better, but doesn't necessarily do better in the future. So for us, the priority is very much getting new alternative markets in. We add about 50 every year. We're now trading about 500, just under 500 markets. And, they're everything from, methanol, as I mentioned, jujube. So I think, it's a fruit, peanut kernels in China. There's a lot of stuff in there, and they're all pretty orthogonal. Most of them are reasonably orthogonal to the other things we trade.
That's incredible scale. And I suppose we'll get onto some of the macro sort of risks that we sort of that you see ahead. But as a sort of quick top-down view, is this macro environment working particularly well for systematic trading? And what makes it particularly sort of apt for it, I suppose, or for the trend following?
Broadly speaking, I think this is going to be will be a very good macro environment, but that doesn't mean it's good every month or every quarter, because you can have volatility with some whipsaws and reversals that may be tough for trend following. But the basic question is, do you think we're in a non-stationary environment? Do you think prices are going to be in a very different place months, quarters, years ahead? And I think we're in an environment where the rate of change is almost dizzying, okay? And we can talk more about it, but basically, we were in this kind of Pax Americana after World War II. The post-war American century, America was so dominant economically, militarily, and kind of broadly enforced a certain peace and certain norms. Fossil fuels were plentiful and relatively cheap. It felt, at the time, it felt more permanent than it really was. And now we see that the pillars of that order are kind of breaking down. Certainly, the US does not have a particularly stable financial position. Yesterday, there was an awfully bad long bond auction. And people are extremely concerned about the national debt in the US, which is either about 33 or 4 billion, if you count it, in total, or if you consider the privately held part, it's a slightly smaller number. I think 26 or 27, somewhere in there. Either way, it's a big number, and it looks set to take off further. That's a concern. You have countries around the world that actually are a lot stronger militarily and economically than they used to be. This is not necessarily a bad thing, but it's a different world with economic as well as strategic multi-polarity. It's a world that's more complex, okay? And then we have the energy transition. There's a wonderful book. I want to totally recommend it to everybody. Václav Smil, S-M-I-L, How the World Really Works. And it's a terrific book about energy. And the reality is energy and how a society generates energy is so key to its development. And relative to a couple of hundred years ago, humanity, the primary energy supply is several times more per capita. And most of that came from fossil fuels. And weaning ourselves off of fossil fuels, decarbonizing, is so difficult, as Dr. Smil documents. It's hard. The 4 pillars of modernity, as he calls it, was cement and concrete, steel, plastics, and nitrogen fertilizer. They're all very fossil fuel intensive. And as we were talking about before we even started, the green transition is going to prove to be resource intensive. You need various metals and materials to produce batteries for electric vehicles. So the environment that I'm describing is one where things are changing. We're going to try to decarbonize, but it's going to be a tough process. We need to do it. We absolutely do. Don't dismiss climate change. The climate is changing, and decarbonization will be difficult. We're moving into multi-polarity. The debt position of the advanced economies, the fiscal position, is very, very tenuous, very delicate. It's not particularly stable. So this is an environment where things are going to move. And so I like being long volatility, because trend following is basically a long volatility strategy.
Absolutely. No, thanks. And that segues very nicely onto, as I say, some of the points we've been sort of discussing. I suppose one of the big themes, as you mentioned, is the reversal of the post-war globalization and the pullback of the US from sort of playing global policeman. I suppose some of the kind of questions from my side, at least, is how do you know, or is the US truly in decline? Is it sort of inevitable? And is the US ready for it, I suppose?
Well, I don't want to pretend to know all these answers. I mean, these are hard questions, and a lot of people are thinking hard about them. And my angle would be this: there has very, very seldom been, if ever, a unipole, a one big hegemon for the world. Even in the glory days of Rome, they didn't conquer Persia. At various points in time, the Chinese have been among the largest powers. Usually, there were a bunch of big powers. And so the situation where the US found itself at the end of World War II And then after the Cold War, maybe was the peak of the US in the early 1990s? Certainly that's when Francis Fukuyama wrote his famous book about the end of history, that sort of we have it all figured out now and the future will look just like us. It struck me as a very hubristic point of view. Yeah, so there's almost no question that the relative US dominance is gradually coming to an end. And it would be absurd if it didn't. Okay, technology is spreading all over the world. The Chinese are doing remarkable things, and they have outstanding universities, incredibly hardworking people and students. I mean, think of this: 90% of all Chinese families have private tutoring for their kids. And in various international comparisons of secondary school students, they're always right near the top or at the top already, and they get private tutoring. Okay, and they have a very rigorous and shall I say incorruptible admission system based on exam. So an important person in China will have more luck getting their kids into an Ivy League school in the US than getting around the system. I believe it's called Gaokao, but perhaps I mispronounce it, than getting around the merit-based system in China. So China is certainly, despite some cyclical issues with real estate, an incredibly important country coming up. And I don't think many people in the American business community are dismissive. They shouldn't be. They shouldn't be.
No, I definitely agree, and we'll come on to China shortly. I think, as you mentioned, especially when you sort of mention how things seem more permanent than they were, I think history is definitely a very, very good sort of thing to look back on, where you sort of see that these kind of things never last particularly long, and the end of history, as you sort of mentioned, was very premature. It was interesting. You mentioned Rome. I suppose one of the sort of things about the fall of Rome was it kind of lasted a lot longer than I suppose it maybe should have. Do you think there's legs for the US decline to be a lot slower than I suppose some are discussing, and it may be sort of dragging out for decades, if not a little longer?
The US has some wonderful strengths. And in there are a lot of times when I think about my country, there's some real pride. And the educational institutions in the US are amazing. The US remains an incredibly powerful military power, probably the single most powerful one. Although, again, the mission statement for the US military strikes me as quite a lot, it's consistent with this role as a global hegemon that has emerged over time. But I think the US is gonna, it's gonna be bipolar with China. I probably shouldn't use the term bipolar, but they're gonna be two centers of power. And the US will be one and China will be one. And hopefully there will be a constructive, albeit competitive relationship between the two. I don't think the interests are necessarily so much at cross purposes, but who is the person who's written extensively about this? An old colleague, Stephen Roach. He has a very nice book out about China and the US.
Oh, thank you for that. We will, just for all our listeners, we will stick links to all the books you mentioned, and we will have a little bit more discussion around books as well a little bit later on. It's interesting in your sort of talk about the changing and the shift from the unipolarity. Are we talking more about the sort of ascendancy of China, but also the challenges facing the Western model? And are there sort of, I suppose, internal questions that need to be asked, and I guess as to why the current sort of political structures not able to handle the challenges ahead in the West, and where do you sort of see them?
Well, we need to ask ourselves more questions, important questions. Because if we go back to Francis Fukuyama in his book, The Last Man and the End of History, there was a triumphalist tone that we had basically figured things out and that there was no alternative model to be considered. And then in more recent years, he's been trying to figure out why things didn't work out so well. And I believe he introduced the concept of vetocracy. And we have to think about our institutions. And because imagine we're people on a bus and we want to go somewhere. It's not a great thing if the person driving the bus is not accountable to the passengers at all. That can lead to some pretty bad outcomes. They go where they want and the passengers are dragged along. So, but on the other hand, if you have an ongoing melee where people are constantly fighting over the wheel all the time, the bus could easily crash. And there needs to be a method of organizing things where there's accountability, representation, but an emphasis on governance over longer timescales. Think about all the times we've stopped and started the Keystone Pipeline. Think about the healthcare system in the US. And I'm not advocating one thing in particular, but we had an attempt with Obamacare that Trump partially reversed. Everything is lurching one way, then the other way. The level of consistency in our policy is very low. And that's because politicians live in a state of great insecurity about their jobs. And they're essentially worrying always about the next election. Daniel Ellsberg, he was the fellow who published and got into a great deal of trouble, the Pentagon Papers, way back when, which revealed important facts about how the US government was approaching the Vietnam War, and the fact that, to a large extent, the American public was not hearing that behind-the-scenes discourse among policymakers. Well, Daniel Ellsberg had this idea of the stalemate machine. So he argued that it's very difficult for America to get out of conflicts because no one wants to take the L before an election. No one wants to explain to the public why it didn't work out. And there's always an election coming up very soon. And so that it leads the US into these very difficult situations. For example, we stayed for a very long time in Afghanistan. And I think it was actually Trump who negotiated effectively the departure in Doha. And then when Biden executed on the very departure Trump had previously negotiated, he was blamed. And everybody said, look at this mess. How can we be leaving? Why are you doing this? And he actually dropped in the polls notably. Okay. Now, again, I'm not taking a stance on what we should or shouldn't have done, but I'm pointing out that the time scales over which the people consider these things and politicians address these things, they're too short. And so you have a whole range of problems that are typical of what we're facing in the US and in Britain and in Germany. A lot of public debt, a lot of populism, short-termism, okay? The polarization, and the idea that the political process is not about choosing the right person to govern you, but about choosing a person based on the sensations they elicit, the sense of affinity with your group. Somehow we have to become a little more long-term, and I'm not sure how to do it, but I would like, it would be a wonderful thing if we were able to think more about how we can make our political system more focused on good governance and less on name-calling and short-term nonsense.
It is a very good point, and especially I think we've seen it come to the fore in terms of the short-termism versus long-termism. Because I mean, a lot of political analysts are sort of looking at the situation in Russia and Ukraine and seeing it partly as terrible misstep by Russia on a political scale, but also them seeing it as a more of a long-standing, they can outlast basically whatever coalition or elected official is in the West. And we have seen a lot of rise of populism. So that was going to lead on to and you did mention sort of Trump. I suppose an interesting question I would have is, as we're sort of going into an election year next year, we're seeing populism pretty much across the board in the West rising. In your view, does sort of, I mean, I suppose taking Trump, for example, the election of Trump, say, or Trump 2, would that accelerate the sort of process you're talking about? Or is that just a symptom of the long-standing kind of process as it works, if you know what I mean?
Well, I don't know. I don't know. What I would say is this. We should try to gracefully manage the transition from being the single hegemon to being a really important global power that doesn't necessarily try to do everything everywhere. It's just logical. I'm not certain that we can afford the situation. Take a look at where we are right now. We're running deficits of about 8% of GDP, give or take. Forgive me if it's 7.5, but it's in the ballpark of 8. Okay. And if you look at what the Congressional Budget Office predicts about that ratio, okay, it rises pretty sharply over the next few years. But it isn't quite right because you need to take into account where interest rates have moved. So I would encourage people to take a look at the Penn-Wharton budget model. And it's a model very similar to the CBO model, but you can play with it, okay? And they put out a very nice report this year where they showed what happens under different assumptions. So if you take the CBO assumptions and bump interest rates up by 100 bips, which by the way isn't crazy at all. We're there, and that, you know, I'm like, right? The thing takes off like a rocket, the debt to GDP ratio. In fact, they pointed out that there's a great quote in there. They said, outside of tight academic and DC modeling circles, people do not realize that you can't even run these budgetary models without making a sort of strange assumption. And the assumption is right beyond the horizon. Somehow we find God and engage in austerity. Okay, somehow the light strikes us and we say, whoa, we've had it with these deficits, we're going to do something. You have to put that in, the authors were saying. Because if you don't, by backward induction, everything just unravels. Because markets ought to anticipate the unsustainability and eventual collapse, if you will, of the budgetary arithmetic. So it's very much worthwhile taking a look at their website, the Penn-Wharton budget model. So when you look at that and you say, okay, we've got some budget problems. Then you go back to the CBO and you say, what were you assuming about defense? Oh no, they're assuming that we spend less. They're assuming that we gradually take down defense to what is it, about 2.5% of GDP, roughly, something like that, 10 years out. And then I'm thinking, wait a minute. If we resist the move to multi-polarity and start projecting our strength, as, for example, neoconservatives would encourage us to do, that's going to take more spending than what's in there. And there is also a kind of, how should I put it? In military circles, it appears that there's kind of a consensus that we're not as strong as we ought to be, that we're not as strong in the US as we were in the 1990s, that we're not actually very ready for the mission that has been defined. So I think that this forces you to the conclusion that Americans need to think very hard, policymakers, about what the mission is. What's our place in the world? And my hope is that that transition can be done gracefully. I'd say one of the, so different people across the political spectrum have different views about to what extent America should be the global policeman and present everywhere and doing everything. We also need to think about what we can actually afford.
That's a very interesting question, and I think Bilal on one of the recent podcasts, he was actually speaking with Barry Eichengreen, and one of the sort of comments he made was it being partly on the deficit side around lack of revenues for the US. Like, it's a low tax, especially when you compare to the rest of the sort of Western world, far lower tax than a lot of it. Could we be going into a sort of high tax future, I suppose, in the US? Or is the US ready for that? Can they? You sort of mentioned about austerity, but on the other side, I suppose, of the equation, is there any sort of prospect for that, do you think? Or
that's another great question. You're asking some really good questions. I wish I had all the answers to this stuff. This relates again to the short-termism versus long-termism. The U.S. needs to clean up its debts, sort out the issues with entitlements, and build a lot of infrastructure, and might need to spend more on the military. I don't know. It depends on what your view of the mission is. In my view, I would be happy with spending a bit less. But another way of squaring the circle would be higher taxes. But it's very politically unpopular. Americans as a group don't feel like they're getting much value from the taxes they pay. People in Europe and in England, I can say that because I'm a British citizen as well, and I spend a lot of time there. They at least feel that they get some stuff. The average American often wonders what they're getting, because they certainly don't have a sorted healthcare system, right? And they recognize, very few people know the math, but they recognize they're spending perhaps between 800 billion and $1 trillion a year on a military that has something like 800 bases around the world. That's a lot of bases. I'm told the Chinese have one in Djibouti, but I'm not sure. I'm not an expert on military strategy or anything. So if I misstate something, please forgive me. I don't know. It's going to be hard politically to raise your hand and raise taxes. There are very large parts of the country that just won't tolerate it. Most of the red states, that would be politically suicidal. But it is a way of approaching this, even if it does come at the cost of growth. High taxes are just not great for growth. If Europe is the model we want to follow, we need to be careful, because the lack of dynamism in some European economies and slow productivity growth is a matter of great concern to many economists. But my answer is, it probably means more taxes in the end.
No, I think you're hitting on some really interesting points, especially around the, I suppose what you described as bipolarity, and we'll kind of dig into that. But it is a very interesting point, as you mentioned, China. I think as far as I'm in agreement, without a Google letter, it's one in Djibouti, and there was talk recently of one in Oman, which is interestingly got the Americans quite concerned, it seems, for, as you say, 2 versus 800. But it would be interesting to know your thoughts in terms of, do you think it becomes a bipolar world, or is it more a sort of regionalism? We're seeing a lot of more, it feels at least in the last 2 years, there's been more regional wars. We're seeing in the Middle East, Ukraine. Is there a sort of risk that we fall into that kind of situation where globalization does pare back on the back of that?
I'm not certain. And I don't know if I see it as a positive or negative. Certainly wars are a negative, but the emergence of regional powers that matter is not necessarily a negative. It just sort of depends on how people behave. I suppose the American dominance imposed a kind of order, and that probably the scenario you describe involves more conflict, and there are just more people doing their own thing. It's countries doing their own thing, that it's going to necessarily lead to more conflict. It's probably true. Yeah, and again, I'm not very certain whether we get the bipolarity or whether you get a true multi-polarity. I know that there are plenty of thinkers out there that say that they're going to end up being 5 or 6 or 7 poles in this dispensation. I don't know. I mean, just from the standpoint of what I do for a living, all of this stuff makes me sort of like being long volatility. I think the years of my childhood in the United States, growing up in the late 60s and the 70s and so forth, the world looks so different and so much less stable. But I suppose if you go back further in time, it didn't look like the Pax Americana at many points in history. The world is just a very complicated, unstable place.
Well, it's a very good point. And when you mention, it's interesting, you sort of mention around being long vol and the sort of comfort you have with that, and it does sound like increasingly a good position to be. How does, back to sort of working in the niche markets and the sort of, as you say, things like Malaysian palm oil, etc., how does that look from a functional perspective if you were to see the kind of more regionalism or even the bipolarity kind of breakout? Is it more just more legwork and things like that, or are there more sort of fundamental operational risks on that side?
Well, the first thing is that probably some of the correlations will break down. There'll be more independent movement of things in a world that's more fragmented. I mean, kind of linguistically, the way that sentence was constructed seems to make sense, even if I'm lacking in specifics. It certainly requires more legwork. It already does. We're very, very active. We're very active in Chinese commodity markets. And they're amazing, big, liquid markets, but it's not trivial for outsiders and offshore money to be involved with those markets. And, we think we're good and responsible participants there in the way we do things. And, it's certainly a meaningful part of our portfolio, but it wasn't easy. Okay. And in a sense, that's what people pay us for. They pay us for doing that legwork and getting into operationally challenging markets, managing risk well, and just having the process be very tight and buttoned down and careful, where we're thinking about all of the different risks that can occur. I mean, like what happens if the regulator says, I can't trade it tomorrow? Like, how do I deal with that kind of thing? And so you think about all these things and you plan for these contingencies, and you never do anything that would put the fund in a kind of a really threatening position. So I think this is a world where there are going to be a lot of opportunities for the kind of stuff that we do. But I have to say, on a personal level, I find this much change slightly unsettling. I don't know about you, but it's you look at things, and the certitudes that I had as a young person have sort of dissolved into a kind of measured skepticism about, some of the conventional wisdom.
I definitely agree. It's I suppose went to uni just as the financial crisis. It's kind of been a crisis after crisis, it seems. But I mean, one of the things I think that's definitely taken a lot more airtime, surely, and you didn't sort of touch on it, was energy transition. It would be interesting to sort of get your thoughts on that a little bit more, because I know you were sort of talking about energy intensity falling and the difficulties of that. I suppose the counter to that, or the sort of question I would have is where does, I suppose, nuclear kind of come into that? But also on the kind of scarcity of resources and things like you mentioned sort of lithium for lithium batteries. I do sort of remember early 2000s people talking about us running out of oil, but in that regard, demand sort of, if anything, created its own supply. In that it sort of incentivized people to, I guess, look harder. Is there a chance we could be in that kind of thing, and the sort of?
Well, of course, but you need to know when you actually got lucky. I know that my late mother years ago used to send me these emails. They were kind of like chain emails that went around, and they almost seemed slightly conspiratorial. And the claim was that there was all of this oil locked in shale in the US. And she was sending me this stuff like a long time ago, like the 1980s or something. And I was a little bit skeptical. I didn't look into it properly. And my attitude was, if it's really there, people are going to go get it. So, Mom, quit reading these things that your friends send you and forwarding them to me, you know. But guess what? God bless her. She was right. These people were right. The Mogollon Rim and the Eagle Ford, and people knew about these shale deposits for a long time. It was just a question of developing the technology to go after it. But I don't know that the same thing is true for lithium, nickel, copper, and it takes a long time. Back to my point, I mean, people kind of knew about this for 15, 20 years before it was actually exploited, if my memory is correct about when Mom sent me these emails. But clearly not a lot was happening at the time, right? And so you need to be mindful. I mean, a person who has spoken very intelligently and clearly about this is Robert Friedland, I think Ivanhoe Mining. And it's very worthwhile listening to him on these subjects. But the basic story is this. In the digital world, things can move very fast. Maybe the constraint is something like Moore's law, okay? But when it comes to stuff like batteries and electric vehicles and stuff that will hurt you if you drop on your foot, like matter, molecules, things move a lot slower. We don't have great replacements at scale for those 4 pillars of modernity that Smil identified in his book: concrete, steel, plastics, nitrogen, fertilizers. We don't have great replacements at scale, cost-effective replacements. That's just true. And then when you talk about, okay, you want to do vehicle electrification, the Western governments have, by and large, dropped the ball on climate change. We need to be going after it in a really intelligent way. Instead, governments just passed mandates and hope somehow people are going to achieve it. Well, if you have a lot of electric vehicles, then you're going to need batteries for them. And if you need batteries for them, you need the materials for batteries. That's the part nobody figured out, okay? And when you map it out, it's going to be very hard to deliver that. And by the way, very energy intensive as you try. Likewise, you need electrical grids that are capable of handling mass vehicle electrification. Our electric grids in many developed countries are decades and decades and decades old. And of course, again, I'm not the super expert on the subject, but you can find them. They don't store energy, okay? And so there's not a lot to do with these extra electrons, okay? Because many forms of renewable energy don't produce a smooth flow of electrons. Instead, you get bursts based on, for example, wind, and then it goes lower and so on. So there's a lot of work we need to do for the energy transition. It's going to be very energy intensive, materials intensive, is going to drive, we think, probably some very big trends. The people who argue for a commodities super cycle over the years, they're probably right over the very long term. And so you also asked about nuclear. I would say a lot of the very smart people say that the right answer for energy, whether you're saying, is it fossil fuels? Is it sustainable? Various forms of green and renewable energy? Is it nuclear? The answer, a lot of the well-informed people say, is all of the above, with an emphasis on decarbonization, with an emphasis on that. But perhaps there are issues with nuclear that I don't appreciate as a non-expert.
Absolutely. I mean, myself included. I was actually going to. You made a very interesting point around electricity grids, and it sort of, I suppose, picked the sort of thought in my head of, is there a sort of second mover advantage on those economies that have perhaps less electrified? And as you mentioned, sort of the raw materials being incredibly important for this, is I suppose, one of the oft missed discussion points is, I suppose, the role of, or the position of Africa within this very energy or very resource rich, a lot of, I suppose, second mover advantage possibilities. How do you sort of see that in the mix of the US-China growth story, etc.?
Well, to my understanding, China has reached out in various ways to the African countries and other countries, especially resource-rich countries, saying, what can we do for you in return for access to resources? And that's great forward thinking by China. And the popularity of China among young people in Africa is so high. They appreciate that long-term thinking and that investment. And I think it's a great thing. And it is unfortunate, I think, that the US hasn't done more, because Africa definitely needs some assistance with development. Everyone agrees. And I hope Africa develops in a spectacular way. And there may be, just as you say, some great advantage to the fact that you're starting without an installed infrastructure that you're patching up. Because, one is hopeful that this next century will be a great one for Africa, because they certainly have not had an easy time, with the colonialism of the past and issues that have extended into the present. One would think that the continent and the many countries there, have great potential, and let's hope that potential is at least partially realized. People, there's a real opportunity for a lot of people to live better.
Absolutely. I was just going to sort of ask, we've obviously touched on a lot of risk scenarios and sort of tail risks across the global macro space. Are there any other sort of things, and not necessarily keeping you up at night, but sort of topics that you'd sort of you see as underappreciated on the risk scale of, I suppose, in the same kind of context of global risks?
Well, one thing that may be underappreciated is the fact that the U.S. military capabilities are not what they were. And in addition, the staying power of the U.S., given ever greater short-termism in the political space, may not be what it was. And so I think people should not be confident that, that the Pax Americana will hold. One doesn't want disorder in the world, and I hope that the world is an orderly and a reasonably orderly and good place. But I'm not sure the U.S. can call the shots the way we once did. And actually, senior policymakers in Washington, many of them realize this. Okay, it's not, what I'm saying is not rocket science. It's just reality. But I think there are people in the investing public who are not necessarily sensitive to this. I mean, one thing that I heard from someone who is very well connected is that if there's a tussle over Taiwan, the war gaming that the Pentagon has done and the consultants have done do not suggest that the U.S. can be confident about the outcome in a struggle over Taiwan. So hopefully there will be no struggle, and things can be worked out in a smooth manner. But I wonder how many people know this, because when I heard this, I was a little surprised in the sense that I had not appreciated how capable China is within a few hundred miles of its shore. It's very capable at certain things. And likewise, tensions are exploding in the Middle East. And there are various actors in the region who are not perhaps as weak as people think. And so everybody needs to be pretty careful about what they do. And I'm very hopeful we don't discover, who's weak and isn't weak, and things kind of can be managed. But I'm just saying this notion that many people in the States have, that we're really pretty omnipotent and can oppose our will. By the way, we didn't have that notion at the end of the Vietnam War. We didn't. But that notion came back, particularly after the 1990s, with effectively the triumph, if you will, in the Cold War, where the Soviet Union just kind of went away as an important adversary.
Yeah, no, it's a very important point. And it's also quite interesting, I suppose. I think there is a risk, obviously, with Russia being almost playing the same role again as the adversary, and quite honestly looking quite weak over the last sort of year or so in its kind of goals, that we do get into that sort of, I suppose, complacency again, even when it's perhaps even less merited than the 90s. But definitely a lot to think about on that front. And thank you very, very much for sort of that. I was just going to we like to sort of ask, and I know you've touched on a lot of the books that have kind of influenced you through your life, or just things that are sort of very interesting you find. And we will have links, as I mentioned, below when we sort of do publish this. But I just wanted to ask if there's any, beyond sort of Kindleberger and Fischer and Smill and Roach and Frieden, if there are any sort of other books that you kind of would really recommend, or that really sort of influenced you through your career.
Oh, there have been a lot. I read a great deal. I would say that there was a terrific book about China I read a few years ago called "When China Rules the World." And it actually had a very nice discussion of the history of the Western world as well, as a point of comparison. And it was let me just was it Martin Jacques or Jacques Martin? I think it's Jacques Martin wrote it, and I very much admired the Martin Jacques. Okay, and that was a very, very interesting book to read. I've also been influenced somewhat by the realism school in international relations. You see, I think one of the tricks to finding the truth, there's no general formula, but you need to be willing to accept or seriously consider ideas that make you uncomfortable. You have to be willing to. It's like the issue of how do you become a good person. It starts by considering the fact that you might be wrong, that you might be acting not so well in a given situation. The person who looks in the mirror and wonders about the correctness of their own actions, that person has the potential, right? Likewise, when it comes to ideas, the assumptions you make, the basic ideas you've inherited from your environment. You should be questioning them. And by the way, this is also very good in the world of investing and trading. You have all these ideas that everyone sort of believes. What if they're wrong? Challenging them. So in the realism school of international relations, a lot of the ideas make you rather uncomfortable. For example, the Thucydides trap, Graham Allison. So the notion there is that when you have an existing strong power and then an up-and-coming power, the existing strong power might very well choose to go after them, right? Before it becomes too late, okay? And, Graham Allison looked at, I think it was 18 cases. And in 16 of the 18, the great power just attacks, okay, at some point. It was some sobering ratio like that. So Graham Allison and John Mearsheimer, who was one of the leading thinkers in the realism school, who very much predicted the Ukraine conflict ahead of time and how it would turn out, like years ago. So there's so much great reading to do. I just wish I had more time because, I got a job, man, and I have to focus on work, but, it does, there is a bit of a connection because we want to make sure that we cast our net very widely with respect to these markets, that places where there's the potential for dislocations and instability, we're involved. So having some understanding of the world as I try to build this kind of very, very diversified program, is relevant. And, the outlook actually really is quite interesting, particularly the next 2 years for interest rates and stuff. I forgot to tie that off. Okay. So I talked about the debt sustainability equation and how we're in a bad spot. And there are essentially 3 ways to sort out our bad finances. One way is by somehow magically having a high growth rate. That really fixes things. And the second way is by running a primary surplus. And the third way is by having very low real interest rates. Because the key ingredients in the debt sustainability equation are debt to GDP now, the real interest rate, the real growth rate, and the primary surplus. Those are your ingredients. And one of the only things we can do to stabilize things is to push real interest rates down. And so I think we're probably going to return in due course to a friendlier interest rate environment and financial repression. Because if you don't, the budgetary math in the US becomes unmanageable. I don't really imagine the US actually having surpluses. Remember, I was mentioning that in the Penn-Wharton budget model, somewhere past the horizon, we miraculously discover austerity. No, we won't. I don't buy it. And I don't think the growth rate is what it is for structural reasons.
Well,
that's the only variable left is real interest rate, right? Real yields. And you have to push that down. And so I think we will see an eventual return to bond buying by the Fed, but I don't know when.
That's a very, very interesting point to finish on, because it does sit, I think, from speaking to a lot of clients, from speaking to a lot of sort of investors out there, very contrary to the kind of, I suppose, received wisdom, which is this was a brief period of very, very low interest rates, and now we're going into the pre-financial crisis, going back to basically higher interest rates that we once sort of had, I suppose. So no, thank you so much for taking the time out of your day to sort of talk to us today. It was honestly an excellent discussion, and I really enjoyed it. I could have gone off twice as long, but we truly are sort of in very interesting times, and it's always hugely useful to hear from people such as yourselves with so many great sort of insights. So best of luck to you and for the rest of the year, and hope it's as fruitful. And please take care.
Hey, thank you so much. I enjoyed it.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.